All right, let's get right into it. Today, we're taking a real, live business for sale listing and we're going to tear it down piece by piece to figure out what it's actually worth.
You've totally done this, right? You're walking down the street, you see that local coffee shop or hardware store that's always busy, and you just can't help but wonder, I wonder what it would actually take to buy this place. Well, today, we're going to find out.
So, for our case study, we've pulled a real listing from Transworld Business Advisors. They're one of the big players in this space. And what we're looking at is the initial teaser document. You know, the very first thing a potential buyer sees. It's designed to grab your attention. So, we're seeing the exact same info they are.
Okay, so every business sale starts with a story. It's the pitch. The broker's job is to frame this thing as an incredible opportunity. And that's exactly where we're going to start, by looking at how this business is presented to the world.
And here it is, the headline. It's simple, it's powerful, and it hits you with three key things right off the bat. It's growing, it's got a 5-star reputation, and you know exactly what it does and where it is. That's the 10,000-foot view.
Now, what's really interesting here is the focus on the stuff you can't touch. The very first thing the seller wants you to know isn't a number, it's the reputation. And for a local service business like this, that is pure gold.
And see, they're doubling down on that idea. Using a phrase like family first, well, that's designed to make you feel something. It suggests that this isn't just a faceless company. It has loyal customers and deep roots in the community. That's a huge selling point.
Okay, now this is a really great sign of a healthy business. It tells you it's not a one-trick pony. It's not just moving boxes from point A to point B. They've got multiple ways to make money: packing, storage, and even a niche market with senior relocations. That kind of diversity makes a business way more resilient.
So the story they're telling is pretty compelling, right? But a good story only gets you so far. Now it's time to talk about the numbers. This is where we find out if the story actually holds up.
And here it is, the big number. The asking price is $240,000. This is the sticker price, the starting point for any kind of deal.
But here's the number that really matters for a buyer, the cash you need to bring to the table. And that's a $220,000 down payment.
So wait, if the asking price is $240 and the down payment is $220, what about that other $20 grand? Well, this is where it gets really, really interesting. The seller is willing to finance that part themselves.
This right here is called seller financing. And let me tell you, it is a massive green flag. It's the seller giving a huge vote of confidence. They're so sure the business will keep thriving that they're willing to act like the bank because they're confident the new owner will have no problem paying them back out of the profits.
That confidence from the seller is a great sign, but you always have to verify. So let's dive into the actual financials and see if this story of growth really stands up to scrutiny.
Okay, before we see the numbers, you gotta understand this one key term. SDE, Seller's Discretionary Earnings. Don't let the fancy name fool you. All it really means is this. It's the total amount of cash a new, full-time owner can expect to actually put in their pocket at the end of the year. It's the true earning power of the business.
All right, here's the raw data. We can see the SDE for the last 2 years, plus a projection for this year. And here's what you have to notice. Check out the source. The first 2 years come from tax returns. That's hard, verifiable proof. The current year, 2025, is from their internal profit and loss statement, which makes sense.
This chart tells the most important part of the financial story. Seriously, forget the specific numbers for a second and just look at the shape of that graph. It's a clear, consistent, beautiful upward trend. This business isn't just profitable, it's growing. A lot. Now, this is how it connects to the price. The asking price of $240,000 is about 2.15 times the latest earnings. For this kind of business, that's right in the normal, reasonable range.
So, the money is strong, and it's growing. But what are you actually getting for your $240 grand? Let's break down what's included in the deal. A buyer gets $25,000 worth of equipment. You know, the trucks, the dollies, all the office stuff. You also get the business name, that amazing 5-star reputation, and the customer lists, which is huge. What's not included is the actual building, the cash that's sitting in the bank, or any money the customers still owe. This is a super standard way to structure a deal like this.
Now, these little details are absolutely critical. Relocatable is a game changer. That gives a new owner incredible flexibility. We also see the current owner is working a normal 45-hour week, and there's a full team of 5 employees already in place. And get this, the lease for their small office is just $500 a month. The overhead is incredibly low.
So, we've gone through the pitch, the price, the profits, and all the assets. So, what's the verdict? Let's pull this all together and summarize what this opportunity really looks like.
The story and the numbers really do line up. You've got strong growth that's backed by tax returns, you've got a killer reputation, multiple sources of income, and a trained staff ready to go on day one. Add in the seller's confidence and that operational flexibility, and you're looking at a really compelling turnkey business. So we just did a deep dive on one specific business, but the lessons here are universal. After seeing how reputation, earnings, and operations all have to fit together, what's the number one thing that you would now look for when searching for a business?